Hello everyone. We're going to go through a trade here that I did with Ford, and I initiated the trade on January 22nd, 2013, and it was with Ford. But first we're going to take a look at the market here. Right now I have the SPY. I'm going to switch this over to the S&P 500, not just the index fund. So here's the S&P 500. Normally when I do my trades, I try to look at the overall market first based on the S&P 500, and as you can see here we have a support line. Well, it was resistance, and then the S&P 500 broke through, therefore it turns into support. Now looking at this, I didn't really like what I seen. I'd rather bounced off, but at this point it didn't. And then when we look at the VIX, here, we can see that it's continued to go lower. And here is this blue line here that was established since about 2007. So it's broken through that, which is very surprising. And at the moment, I'm not quite sure what the market's going to do with the whole deficit, in addition to the Bush tax cuts not being reinstated. It's pretty surprising that the market's actually continued to take off. But I was trying to mix things up a little bit. Like I said before, I try to do a top-down view of the market before I actually initiate a trade. But I was looking through some trades, and here we have Ford. And Ford, I was liking the way Ford was looking. The only thing it was going against the market. I generally do not like that, but I liked all the other indicators, so I took a chance here. I don't normally do this, but I just wanted to show you how this trade played out. So again, we have Ford, and I did a bear put option spread. And the spread, what you do is you buy a higher strike put, and then you sell a lower strike put. And in this trade, I bought the March 16th, 14th strike put for about 50 cents or $50 when you convert it, because there's 100 contracts in one, or there's 100 shares in one options contract, so it would have been 50 cents. And then I sold a March 16th, 13th strike put at 18 cents. So basically what I'm doing is I'm financing my position from the credit of 18 cents. So then at total risk, I'd only have 32 cents or $32. Again, with the options contract, there's 100 shares. So when we times that by the 32 cents by 100, we would get $32 total at risk. Now, this gives me a potential to get a max reward of $68. If that's assuming that the stock falls past $13 or is around $13. That would give me my max reward. Another thing to point out here is that the risk is $32. The max reward is $68. That's a return on investment of over 100%, which is great, which is what I want to see. You know, I want to try to initiate trades that give me a risk to reward ratio or a reward to risk ratio of 2 to 1, and that's what I like to see. So I jumped on that, but I did establish my stops and my targets. My stop was $14.55, and the reason for that is if you look here, we have a resistance line here, $14.53. I would scroll back, but with this software that I'm using right now, I can't do that, but it was established a while back. And as you can see here, going up, it's forming these candlesticks here. It's forming spinning tops and then doji. Spinning tops and dojis are indicators of indecision, and when you have indecision via resistance line, that could be a marker to let you know that the stock is going to reverse and it could start to decrease. And that's what I was looking at here. In addition to that, if you look down here at the RSI, I don't know if you can see this, but it's blue and it's above 70. That means it's in an overbought position. This is another bearish signal. So with the combination of the resistance line and the dojis that are forming, the dojis and spinning tops, which again is another indecision by the resistance line, in addition to the RSI being over 70, it was looking at a really, really good trade. So that's why I initiated my options contract. And again, my stop was established above this resistance line. I did it around $14.55. So with my, I use Options House. With my contracts, I can establish triggers. In this case, a stop trigger based on the stock price. And that's how I did it. Again, my stop was $14.55, excuse me, and my target price was $13 flat. So going through the trade here, I got in on the 22nd, which would be this day here. I don't know if you can see that, but it's where the white indicator is at. So I got in on the trade on that day. Now I don't really worry about the blue line there. This blue line here is the 20-day moving average. I don't really worry about this so much as support and resistance. Generally it can break right through, but the 50-day moving average would be my predominant target. But in order for me to get the best returns, I chose the spread with buying the March 16th, 14th strike put and then selling the March 13th strike put. I found that to give me the best risk-reward ratio, and then also it gave me the best probability of reaching my target too, which was $13 here. So going through the trade, as you can see here, the stock's fallen nicely, right as I planned. And again, my target was $13. As you can see, it's hit. It's today, we're still in trading, but right now it's right on $13. It hit the target. Now when I woke up this morning, I looked at the trade and I realized that Ford had an earnings announcement. If I would have known this prior, I probably would have exited the position a day earlier, collecting just a little bit of profit. But this morning when I woke up, they had positive earnings. But because their outlook for 2013 is going to be set in line with 2012, and they feel that their European sales are going to be down a lot, but it's supposed to counteract with the US sales, investors didn't really like that. So therefore the market fell down even more. And when I woke up this morning, it was down about 50 cents. And then I decided to close out the position because I didn't like how they had earnings that were positive, but yet a pessimistic outlook. So I closed out of the position around, it was about approximately $13.25. So I was 1/4 away from my profit target. And to put this in perspective for you, this gave me a profit of $26. That's $26 for every option contract spread. So for every buy and sell for the spread, I made $26. Now I did 6 contracts of each. Therefore, if you take your profit, which would be $26, and times it by 6, I made a profit of $156. Okay? In addition to this, I had my risk at $32 per contract. So therefore, I had 6 contracts each. Again, it was 6 contracts each, which still gave me the risk of 32 cents, but you times that by 6, and that's going to show you your total at risk. And my total at risk was $192. So with that being said, I made $156 in profit with $192 at risk. This is a return on investment of $81.25%, almost 83, well, about 82%, almost 82% gain on investment. And that's in about a 9-day period. That's a really, really great gain. And I've only been using just small amounts here for just kind of letting you guys know the power of options and also technical analysis. And to put some of this into perspective for you, if you were to just buy the stock, okay, you would need the stock to fall about $11.69 with the same amount of money invested. The $192 invested, you would need the stock to fall $11.69 in order to maintain that same return on investment. Now, that would basically mean that Ford would have to go bankrupt. That's not really going to happen. And in order for you to obtain the same amount of profit with the amount of move that the stock made from when I purchased it, this is just solely on the stock movement from when I purchased it to when I sold it for the options, you would actually need the stock to fall. That was about 8.3%. That means in order to capitalize on getting $156 in profit, this is without commissions, by the way, you would need the stock to fall 8.3%. That's with $1,891 invested. That's a lot at risk. So I made $156 on only $192 at risk. And then if you were to use the stock itself solely, no options, you have to invest $1,891, and the stock would have to fall 8.3%, which is what it did today. Now that's a very big move. I would say for about 9 days, it's about a percent a day. But as you can see here, options, if you use correctly, can yield a lot of profit when you're looking at the stock counterpart of it. And this is just a forward trade that I did. I'm working on another one for Coach, and I might post later. But this is to give you guys a good example of technical analysis in options in action. If you guys have any questions, just feel free to let me know.